wham, here's my face. You probably didn't expect it. Hit a little snafu with the microphone and then the spacing on the OSB. Getting used to all these apps, they're not that difficult, but also don't spend a ton of time learning them because I have other things going on. But each iteration will be better. I apologize that the video isn't centered or isn't perfect again. We're a work in progress. The content is gold. Appreciate it or not. I don't care. It's worth watching.
Hey folks, it's Dan Max here, the trading agent. I hope you guys are witnessing and watching the updates and tweaks I'm trying to bring to the streaming platform to kind of keep everyone informed. There's really, I'd like to make this look as legit as possible, but also provide content. So I can get, the people that really need to see this stuff to see it, the friends and people that I know who are constantly going to be watching this. I know you guys appreciate it, so I appreciate all of the likes and comments that'll hopefully start piling up once I really start pushing this out. So the first couple of videos, as you guys are seeing, are changing. I will do some more marketing and really push this out there once I get things to where I want it perfect. But at this point, it's just content, and people who see it for what it is will appreciate it, and also it'll just continue to grow. And as I said, I have the microphone today, so I pray it sounds night and day better, so each and everybody can listen is not kind of turned off by some of the sounds that, without a microphone, a real one, legitimately, the laptop that I'm using just doesn't match it. And unfortunately, my other computer is a Mac, which doesn't run eSignal, and then I have another computer with 8 screens that I do trade on. I haven't tried to screen share it. Too many screens. I feel like it just becomes confusing. So doing this Lenovo laptop that I'm always doing. Anyway, let's get started. Where to start today? Let's go with the earnings. So after hours, you had Amazon missed big. A lot of people are talking about that. I've told people for a while now that, especially if you know me, that Amazon just, at this point, they've got a lot of tough comps. Let's just call it that. Here's the after hours action in black. You have to think that, last year you had COVID and everyone was shopping relentlessly on websites such as Amazon. So their comps are always going to be tough. Let's see, they guided below, operating income below. They're saying higher cost. Well, inflation's here. We kind of talk about it. And as you can see, the intraday, it's down almost 3,500 down to 3,200. Pretend it's a $32 stock. It's just went from 35 to 32.50. Not the end of the world, but long term, I'm not sure I'm really that interested in Amazon. But it's a trading stock. People will trade it. Do what you got to do with it. Apple, another miss. They released their iPhone, I think, comparatively, quarter over quarter for them, different times compared to last year. So their numbers don't really look equivalent. But, their iPhone revenue versus last year is much higher. But again, it's released at different times. They reported EPS in line, which is amazing. They can report it exactly in line as everyone's guiding it. It lets you know that people really know what's going on. We're kind of creating the news for this, so it looks like at least break even. But the action to me is probably looking like a dump. Oh, I apologize. I didn't even look at the screen. I was reading my notes on my other computer to look at what Apple was doing. Today, it looked like it was breaking out, but it's interesting after hours. You can see it's kind of had not a huge dump. Again, 150s to 140s. Probably a buying opportunity. Personally, I don't really have a position in Apple, but today's action looks like a false breakout. Just anticipate it. If it can hold some of these levels, that's really what's going to matter. This, I would say, anywhere from 20 and 100 day. We're down there now after hours. I'd like to see what it looks like tomorrow. This after hours market action, as I tell people, it's a complete crapshoot. Whispernumbers.com usually has what the market's kind of expecting for the earnings number. Some of my programs have it too, but a lot of it depends on guidance. There's so many factors, hence why if I tell people if you're going into earnings fully loaded in a play, beware. You're flipping a coin on the next move. You want to anticipate the move to continue, but you can't really predict what's going to happen with earnings. So gamblers gamble on earnings. I tend to play afterwards. You know, the play would, to me, to be wait for the action. If you're a long-term holder, you don't care. I get it. But if you're trying to trade it, this is what you do. You buy the dip. Notice after hours, 144.50, and you extrapolate it back to your daily chart. You see, it's really simple. Wow, look at that, 20-day, 100-day. Now you use this area as an entry and a stop if you want to play after hours action. Again, newbies love to overtrade. They love to gamble on everything, especially when they've made money. They're going to be more active and be willing to lose it. As a casino, the stock market gets everyone at some point, but newer people to trading like to take on higher risk. They kind of have this, what do you call it? This belief that, you know, since they won in the past, they'll win again, and that everything they do is correct. And again, I think, as you guys know, I play things from the Chicken Little way. You know, first mice gets caught in the trap, second one catches, you know, gets the cheese kind of thing. I've been on the other side of these. I've blown out. I've made mistakes. I've done stupid stuff as well when I was starting off many years ago. And guess what? It takes getting your ass handed to you to learn what to do and not to do for some people. And luckily I survived and got lucky, but I just, you know, preservation. Always give yourself an out. Think of it as like poker. You don't have to go all in before the flop here. You kind of can bet it as you see it. So I prefer to wait for the flop, for an example, as a reference, after, you know, meaning earnings, waiting till after earnings to kind of see how to trade it. At this point, I don't really have a position in it. I will say they're a cash cow. I mean, they're going to sell more phones. I actually got the new 13 Pro, upgraded from a 10 XR. Camera's, it is pretty sick. Anyway, we'll keep it for what it is. Let's just kind of go through these things and blast pretty quickly. The dollar, I was talking about that today in the Discord room, and you could see it hit the trend line. I did not draw this before. Again, you guys see I usually draw this on here because my other screens, if you ever wonder, is where all my main drawings on. This screen I'm kind of updating as we speak. It's a good practice, and also gets me to focus on what I need to see. Not in a sense that it keeps me active in it. All right, I have to update the chart again. It really sticks in my mind when I do it twice. UP trend line, we held. We're at the 50-day. Volume really isn't saying blowout. I kind of struggle with what I think the dollar is going to do. This, to me, you know, big move chop, rubber band man theory. It does look like it's getting a little tired, but this is kind of the make or the break. You can really use this trend line, 25 area. Just keep it simple. Bonds, we talked about that. Been dead right on that. Said higher highs, higher lows. We said we anticipated like this 50-day, 100-day. We blew through it. We went higher. Talked about if you're playing predict the candle games, the next day would be kind of an inside consolidation day. You made a higher high, closed near the higher end of the candle in yellow and green, held the 50-day, held the 100-day. Consolidation. If you don't know what this, you know, if you overtrade, you think way too much about this. Pretend this is a 10-minute chart. You look at it and go, well, there's nothing wrong. It's just made a nice run. 142, 148. All right, now it's taking a break. Simple as that. Bonds, they move slower, but they also follow the same rules as stocks. The VIX, talked about it. If you were buying it at 15, you were going to be happy. Well, you know, guys know me and gals. I prefer retest. You know, we've got this pop. We're going to back test at some point the 15 level. Could it make a higher low or a lower low? Potentially, but this range, as we explained multiple times, it's chrome. It's going to hold. And I talk about this too with, you know, when you are using the VIX as kind of a gauge to how to trade. Here it is. You know, same thing with, you could extrapolate this to IVs. If you know the historical IV with a stock, the higher the IV, you can expect crazier moves. Lower the IV, it's purely directional. Should continue moving on, slow and steady trends. Keep it simple. SPY today. A lot of people are saying, oh, it's going to turn over. No, your boy Dan here doesn't really, he doesn't get caught up on the day-to-day motions. We held the 8-day. We talked about that. That's really important. We're just chopping here. I really expect to see the 2 times range at 460. If you're wondering what the range of the first range was, I'll zoom back out and you can see it's a, where does it start at? Let me redraw this section real quick. I apologize. Kind of looks more like the NASDAQ. I think it's a 3-time range. That was an older one. I apologize for not updating this. But here you can see what I'm doing on the fly. Kind of learn a little bit. So there's the COVID highs, the COVID lows. And I figured I thought it was a 2 times range. Yeah, it's just, you can tell I have the colors saved, just extrapolated differently. Is it exact? 460. I mean, I probably am somewhere off by 50 cents on my points for the top and the bottom. As you can tell, keep an eye, 460. Keep it simple. We should get over that. You can see the old channel trend lines. That's why I think you're probably going to go higher in the SPY. Does it make sense? No, but there's really nowhere else to go. You know, you cannot put money in a savings account. You can't buy safe vehicles anymore that hedge inflation naturally. Like, it's a weird world. I don't want to get into the topic because it can start a whole rant in itself. But if there's inflation, stocks can rise. They should. Companies should charge more. They should make more. It's really simple. But it will be volatile. Study the charts of the 70s. Maybe I'll take a picture of them. I've got them in my Markets in Motion book by Ned Davis Research. If you ever need to, Google it and check it out. You can see the markets as they moved through the history, even all the way back to the 1800s. And you'll be amazed. Recurring patterns. Years, decades, months, everything's seasonal. There's nothing new in the market. Let's go to the QQQ. You can tell we're here at this 3 times range, kind of chilling. I don't anticipate it holding up here. Tomorrow, if Apple and Amazon take a little dive, it's pretty normal. I wouldn't get too worried about it. As we've talked about, low rates, tech likes it. Keep it simple. Who knows what's really going on? I mean, I'm reading about Facebook changing their name to Metaverse and all this crap. Who cares? Gold. You know, just chop, putting people into the headache zone who trade a lot. Broke the trend line. We're holding the 50-day, the 100-day, or the 100-day in yellow, 200-day in blue, and in a downtrend. Keep it simple. There's nothing really wrong with gold, but there's nothing also exciting about it. It can be slow and steady. There's times where that's just how they work. Let's get into AEM. That was a request from a friend of mine who follows us and is a subscriber. They have earnings coming up, and let me pull that up. Again, like I said, I'd like to do this all on the fly so you guys see this is real. This is not some made up stuff where I'm just trying to predict how, look like I'm front running how things are really going to work. So 17. So after the close, they reported 60 cents per share in line. Revenues fell 0.7% year over year. They're still making $1 billion. Production remains unchanged. Really nothing. Miners were down today because of Newmont. And Newmont, to me, is a different animal. It's the biggest miner out there right now. They combined with Barrick Gold and... Oh, man, I'm drawing a blank there. Anyway, it doesn't matter. They pulled down the miners today. But I'm thinking this is a Costanza move. And if Justin Pulitzer is ever listening, I will give him credit for that. It's the confusion before you go. If there's nothing wrong with AEM's numbers. Gold prices should continue higher in time. You do a little, consolidation. You say you run up, you come back, you close right at the 50-day and the 20-day. I mean, you can't make this shit up. It's also a 25% fib retracement. If you do want a day trade or you're swing trading, you want to add to your position, here you go. This is the time. It's not chasing as it's making higher highs, waiting for pullback in firmed areas. It's 50-day, 20-day. I mean, think of it as a battleground where those two are going to be a formidable army to battle to break below because it's support. People don't really understand moving averages. You really have to keep them simple. They're strong until they're not strong, and that's why I like to think of them as like a some troops. If you can mow down the troops, then they weren't that strong, but they're still there. And if you don't have the momentum, sometimes those troops can hold you up. So worst case scenario, I would watch for a gap down and play the up. I mean, this gap right here, 55, just put that level in there. That's what I'd be watching. Keep it really, really simple. Trading doesn't have to be difficult. You can see anything you want to see. Hence why people like myself, traders have been around a long time. We're very honest, very blunt. We try not to see what we want to see in the market. We try to do what the market's doing. It seems very obvious, but emotions can make you really see anything. So let's go on to silver. Whole lot of nothing. 8-day, chopping. 10-day, nothing. You hit the 100-day, consolidating. You notice you go up, pause, you go up, pause, you go up, pause. It's kind of normal. When you zoom out on silver, it gives you more confidence because you can see we broke the downtrend. But never be surprised by retesting. This is a head and shoulders bottom. We talked about this, maybe not on these videos, but in my Discord room and with my friends and family who follow. Look what happened. He popped. Well, could it pop back down to the 20 range? Could it back test this trend line? If it does, you get out your mining equipment and you dig hard on it. And you should add. I would totally add if you had a long position for the long term. Or if you sold puts, you should be looking to buy calls on the retest. I talk about this with people all the time. Sell puts on the first bottom, buy calls on the second bottom because the IV is lower, options are much cheaper. The market makers love to get people to try to pick the bottom and make them pay with options. Everybody who knows anything about trading, if you've been trading for any period of time, you do know that market makers are trying to make as many options worthless as possible. And if that's the case, the exciting bottom when everyone's buying calls, that you hope it's the bottom. You love to think it's going to be a V move, but if it's not, and they retest and you're still holding, your options get crushed, and it's basically the same. You're starting where you're restarting. You didn't make any money, and say you even bottomed the day on the 20 at 20. A retest will crush options. If they're out of the money, oh man, you're just, again, we'll get into that topic if anyone has questions. It's something I'm very familiar with, options. Trading forever. It's funny, I was reading a tweet today, and someone equated who playing options, they did it for many years and quit, and they did it the same reason why, chicken inspectors, don't eat chicken, because they've seen the process, they see that it's not really beneficial to them. And so buying options, you got to be very smart. Selling options, you don't have to be a genius, actually. It's much easier. KL, that's, they're merging with AEM. Oh no, drew out of the box. We talked about it. Well, then you have your stops if you really don't like it. Or you looked at this area. I mean, it's one of those things, 44. Could it be just a following of the Newmont today? Probably. The whole mining market didn't like what Newmont said, but Newmont's a big behemoth. They're old school. They've been around. I don't think they're the leader anymore. And even though they do have proven reserves, it's proven. There's not really much speculation in them. So keep it as it is. If you come back to this 43 area, it's probably a buy. It's, draw the box. Keep it simple. I would say anywhere in here is probably a buy. Just because by then the 50-day will have been couched up, and you can kind of use it as your stop. And it's another thing I love to talk about is you want to create entries where your stops and your risk management is very easy to figure out. You don't want to buy a stock and say, well, I won't know if I'm wrong if it's down $10, but if it goes up, I'm predicting $10. You're not really trading on a ratio that's beneficial to you. You're trading 1-to-1 ratios, where I like to go 10-to-1, 5-to-1, 3-to-1 if I'm day trading. Like, think about it. I'm willing to lose $1 to make 10. If that kind of Vegas bet was around and you knew how to trade and the probabilities were, say, 70-80%, you extrapolate that out, you'll play that game all day, every day, Sunday, tomorrow. Roadblocks, we keep talking about it. It's just compressing every time. Today was possibly a look below and fail. Bear trap. They took this below the 50-day this morning. I was watching it. The volume came back in. We can pull it up intraday. Kind of see. Talk about the highs and the lows of the day are made in the AM. Well, that was the low of the day. Basically sitting around here at the open. If you sold the panic selling in the morning, you're not happy. Let's just call it what it is. See if the volatility spiked a little bit this morning, and then it died right before it blew off again. We'll get into story volatility at some point when there's more people following, so I don't have to repeat it and talk about it, but that's an important thing that I like to watch for. Let's take a look at U.S. Steel. After hours, I think they're up 6%. Let's double check it. Yes, this company we talked about. If you would have been buying at 23s yesterday, they had earnings. No shit, they're up. Their steel prices are up. They're printing money. Steel is actually being used more in demand for building since lumber got so damn expensive. There's a lot of substitution with that. So after hours trading at 25. What do we talk about? Filling the gap. This candle was the big dog. Well, look at that. You test below it and you hold. Is it guaranteed to go higher? We'll see. I like the potential here because people who know me know I love the W pattern. Double bottom, whatever you want to call it, but this is this is the retest. This is where make or break. Low risk. If you buy at 20, you set $1 stop. Here's your 10 to 1 getting back to the top. $10 to lose 1. Because if you fail at 20s, it's broken. And if it does fail and it gets back into it, then it was a bear trap and you can get back in. Again, if you listen to what I'm saying and you follow this kind of stuff over time, you take the emotions out of it, you become a robot, you become an algorithm, and you don't let the price action blind you. Because it's at the lows, that's where you want to buy it. It seems very obvious. And at the highs, you want to start selling. Like, people can never do it because they're emotions. That's another topic for everybody in time. We'll go through that. Good old Tesla. Everybody loves it here, and that's what makes me a little nervous. Keep talking about it. Wasn't calling the highs, saying it is in a topping potential. Topping potential. Repeat. No one come on here and go, oh, you called the top yesterday, and should have broken by now. Well, here's the last top. Gap up, exhaustion, chop, 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 fail. Gap up. Now we're chopping. As I told people, look at the Fibonacci extensions as the highs. You just have to draw your fibs. If you're not drawing your fibs, leave a comment. I'll focus on it and make sure you understand it completely. If you don't know fibs, you're basically not following the rules of the game. The algorithms and the computers love Fibonacci numbers of order and chaos. It's the numbers that the market kind of revolves around, because where does somebody sell? Where do the algorithms look for price mechanisms? They use the fibs. Market makers use the fibs. Everybody uses the fibs. My experience in finance, just 20 years, everyone uses the fibs. If you're not using the fibs, you're tracking blindly. Drawing lines is great, but be aware. Facebook turning to Meta. Metaverse, whatever. Great. I guess it's, if you're looking at Zuckerberg lately, he's selling stock every day. Well, maybe this is the news that he was selling into. He's not very confident about his metaverse success, but intraday, I think they may have had earnings. Again, I don't follow all the earnings stuff because it really doesn't matter to me in the long run. In the short term, it matters. Right here below the 200-day old channels, I apologize if the charts are a little messy, but those lines are there for a reason. They were meant something in the past, and I just didn't draw them. They were there. I mean, we can extrapolate where they came from, but that's why I tell people, keep your lines on your charts, even if it looks a little messy at times. You will go back one day and you go, holy shit, look at that. I drew that years ago, months ago, weeks ago, and that trend line is in play again. Really that simple. Let's look at UFPI, a lumber company. I got some friends who work for them and also have shares. Talked about this blue zone. Let me expand it out because I haven't really looked at it in a while. Said if you got down here, it's probably a buy. Well, you thought it was going, remember I tell you take profits on popping. Well, maybe it's now a big S. Like maybe that's or a W. Like that's the left side of the W. That's the left U and here's the right U. Maybe. I don't know. Look at this nice bear trap under the 200-day. All these moving averages. You would have sold if you had to de-risk profile. But if you would have bought in once it cleared the 200-day, again, you could have been wasting your time buying here. But the 200-day, you break over it with a gap, an exhaustion gap. Or not exhaustion, but a breakaway gap. Again, something we'll talk about if you have questions. A breakaway gap after consolidation is a very powerful move. I mean, you can kind of draw whatever trend line you want that's somewhere in that area. Let me get a clean one so you guys see what I'm talking about. Here you go. This was the little chop zone. You play the continuation pattern. Wherever way it was going, yours going. Chop, 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 breakout. Look what it did. Goes 70 to 84. I mean, if you had a $2 stop buying it at 70, would you be happy with a 14-point run? That's how you make money. It's not rocket science. Again, I don't follow anyone out there. I don't listen to anyone else's YouTubes. I don't give a shit what other people say because I want to keep it simple. The KISS method in trading has made it simple for me forever. You know, you can make everything as difficult as you want to be, but trading is a visual thing, and you can literally pretend to see anything you want. Let's get into Lemonade. Someone was asking me about that one again, and I remember that this. I'll tell not a funny story because I feel bad when people lose money, but when people don't listen, I don't really have remorse. I really don't. You had a nice like W pattern, breakout, runaway, explosion move. Like again, 40 to 200. You didn't take any profit. Notice you retest many times. You had the trend line, fail. Pop back up, great. You know, looks like a head and shoulder bottom, fail. Now it's a double bottom. The people who are telling, you know, hey, maybe you should start selling up in here. Now they're like, whoa, I don't know if I should buy down here. And it's, look at the chart. Do you have to be a rocket scientist, a rocket attorney, whatever you want to call it? Here's your low risk. You had all the risk in the world up here, but now you won't buy it here. Those conversations are always funny because if you pretend you didn't own it, then you can be honest with yourself. That's ultimately what it becomes about. And I think people just, again, if they're up, their account balance blinds them to what could happen. If you look at your account balance all day, you're going to make mistakes. I tell people that all the time. Do not trade based on your account balance. Trade on what looks correct. You can't, it'd be like coaching a game based on what the other team wants to do to make you lose, instead of focusing on what you do well and what you know is right and executing it. Like you're playing into the, you know, your opponent's strengths by letting your emotions run, and the emotion will run like a casino. Casino wins, you lose. It's just a joke. Peloton's another one like that. I hate to pat myself on the back, but it's making a double bottom. You know, no one would sell it up in the 170 range when it, if you draw the charts, and again, I haven't updated because it's, I can see this crap from a mile away. You zoom out. Again, does it have to be perfect up here? No. This is the upper bound trend line. Keep it simple. Once you made a lower high, now you have a downtrend. Oh, you hopefully were selling on the way up. No. Gets back to 80. Now you don't want to buy. Kick you in the head. Slap. All right. That's enough for now. You guys, I hope people appreciate this. Give me more feedback. I will impress upon you the knowledge that I know. If you don't like what you hear, dislike it and say why. I guarantee I have knowledge that the average trader out here that's just pushing content for the reason of looking good, yeah, you know what? Flash in the pants. I'll end it with the rant here. Everybody, if you look at the statistics, 95% of day traders blow up. If you're following someone that's a day trader, ask them if they've blown up before. Because what they'll tell you is, if they have and they're still in the game, they learned their lesson. They learned risk management. Everybody can get on a hot streak. Everybody can win at the casino for an hour. Everybody can do well in the short term. Consistency over long periods of time in a game that's a probability game and gambling comes down to hard work and having a plan. If you're just throwing money at trades, you're just guessing. This guy's talking this gal's promoting this. Think about why, and if you can see what they see. Because if you can see what they see, then maybe it makes sense. But if you're just blindly following what someone says, you're no different than the goober that walks into the car dealership and buys a car without even shopping. You're just being told what to do because the person who's talking to you seems legitimate and knows what they're talking about and trying to help you. And I'm not saying all these other people out there are trying to help. It's just everyone's trading now. And so that whole trend has made it very popular to follow. And so people are just following anybody. And I'll tell you this, and maybe one day this channel will not be free, but free information is usually wrong unless you verify it. I always tell you that if you're getting something for free, you might want to verify if it's good knowledge. Because sometimes people are generous with their knowledge, but sometimes people are also just trying to make a quick buck off of you to sell you some shit that's not worth a shit, period. So on that note, I'll leave it there. Love everybody. Thank you for everyone's support. Share, like, let's blow this up. And if it is, I'll spend more time on it. That's legitimate what I'll do. Again, I have my real estate business, which I enjoy because I think taking money out of the market and putting into real assets that pay you to not work through residual income is the goal of the game. It's not to have the biggest trading account, because guess what happens if your trading account blows out? People just keep growing their bets and then they blow it out. We'll get into that another day too. But thank you again for all your support. Share it, like it, do whatever you gotta do. Comment, I don't care. Talk shit. Feel free. Say whatever you like. I'm out.